Hello friends, James Stephenson with a very quick video. I have to go fast when Loki decides to eat his breakfast, otherwise I won't get him on camera. He's still going. Aren't you, buddy? Yes? Still working on breakfast a little bit? Alright, you got a little bit stuck in your flu? Work it out, buddy. You're okay. So I thought I would make a video and maybe review Tesla's earnings release. I haven't done that, so let me share my desktop with you. Yes, you're a good boy, Loki. You keep doing your thing in the Loki cam down here, and I'll review Tesla's earnings release with anybody who has been living under a rock for the past week and hasn't seen it, or who would just like to get my take on what Tesla has released here. So let's check it out. Profitability, 16.8% operating margin. I just made that video where Professor DeModern has a long-term goal for Tesla of achieving 16% operating margin 10 years from now. That's, years 6 through 10 in his model are supposed to be at that higher level. Okay, did Loki eat all this food? Yes, he did. You're a good boy, Loki. You finally ate all of your breakfast, and better late than never. There's your milk bone, buddy. Good boy. Okay. I'll move this camera a little closer. Back on top of the V8s it goes. So people can keep an eye on what Loki is up to. Wow. Alright. There he is. Okay, so yeah, 16.8% already as of Q4 of 2022. And yeah, some people expect Tesla to not be at those operating margins again until to never do any better than that. That's basically the idea in the valuation model that Professor DeModern used to claim that Tesla is already overvalued today versus its long-term potential. He doesn't see a lot of revenue growth potential. He thinks he does. He thinks 400 billion is a lot. Tesla's going to pass 400 billion and keep going before 10 years from now comes around, which is the same mistake he made in all of his previous valuations. You can see that Tesla's beating the revenue that he had set for them, and that he has the revenue growth trailing off. But go watch that video if you want more information on that. I'm going to keep going here. So 16.8% full year 2022, 16.0 in Q4, if I said that wrong earlier, sorry. 13.7 billion GAAP operating income in 2022, 3.9 billion in Q4. Good stuff. Especially despite all the headwinds that Tesla was facing in Q4. So the upcoming IRA tax benefit in the US caused Tesla to have to offer people money to take delivery in Q4. Otherwise, they would have just waited. Something similar happened in China. So yeah, really good quarter from Tesla, all things considered. Yeah, they address the demand question so many times, both in the earnings letter and on the earnings call, which I did make a video about already. You can go check out my earnings call video. That's an 80-minute long video, but I left a pinned comment on it that has timestamps. So if you want to make it an 18-minute video, just click on each one of those timestamps to hear me talking about the earnings call and skip all the portions where I'm just playing the earnings call audio if you listen to it already and don't want to hear it. So yeah, even though ASPs have generally been on a downward trajectory for many years, improving affordability is necessary to become a multi-million vehicle producer. While ASPs halved between 2017 and 2022, our operating margin consistently improved from approximately negative 14% to positive 17%, we just saw up top here. In the same period, this margin expansion was achieved through introduction of lower cost models, build out of localized, more efficient factories. Shanghai, much less expensive per vehicle than producing vehicles in Fremont, California, Tesla's first scale production location. Vehicle cost reduction and operating leverage. The more you sell, the smaller your research and development expense and your SG&A expenses become as a percentage of that revenue. So that makes you more and more profitable the more you can grow the top line for your company, provided that you don't increase your spending on research and development and SG&A by as much as your revenue increases by. 6.5 gigawatt hours of energy storage deployed in 2022. That's up really huge. That's up 64% year over year. That is a lot. So Tesla's really ramping up the energy business and will continue to do that into the future. So that was good. And maybe I'll just show you this one other slide and call this a video. So here's the financial summary where we get to see the automotive revenues, of which regulatory credits gets its own line right below it. So you can see there was that one really standout year with quarter with $679 million worth of regulatory credits, making part of this $16.9 billion almost of automotive revenue. So Tesla set a new record in Q4 of 2022, not just for deliveries, but also for automotive revenues. Highest number yet, with automotive gross profit nearly at the record that they set in Q1 of 2022 when prices were higher. And the ending inventory level was a lot lower as well. So automotive gross margin was really strong early in the year, 32.9%, and that's been coming down some since. So total revenues, $24.3 billion, if you include all the non-automotive types of revenue. So energy generation and storage and services and other revenues, making gross profit of $5.777 billion, which was an all-time record, beating Q1. With a 23.8% gross margin. Some people expected a number below 20% for Q4 because of the deep discounting Tesla did during the quarter. You know, a $7,500 incentive that Tesla has to eat to take delivery in December is a lot of gross margin impact. So that's over now. Tesla doesn't have to eat that cost personally going forward because the U.S. government is footing the bill for that incentive from now on. So from the buyer's perspective, all they care about is their out-of-pocket costs, right? So from their perspective, they would have waited until January to take delivery of their vehicle that was available to take in December. And that's what forced Tesla to have to offer that incentive. That's gone now, so don't expect lower margins in Q1 because Tesla cut prices. Those price cuts were already in China and in the U.S. with incentives. So if you're expecting a much lower number than this in Q1, Tesla is going to disappoint you with a number that's about like this or maybe a little better. I'll update my model and let you know how that turns out. Adjusted EBITDA, an all-time record. Adjusted EBITDA margin, really close to what we saw the previous couple of quarters. Not as good as Q1. Q1 was a really good quarter when you look back at it. And GAAP and non-GAAP net income numbers here. So an all-time record, $3,687,000,000, further increasing Tesla's retained earnings past $12 billion That was a negative number just a couple of years ago, where it had been for a long, long time, giving rise to the Tesla Q conspiracy theory that the more they sell, the more they lose. Well, that's not true anymore. The last couple of years, it has rocketed skyward, which I made an animated chart to illustrate, and I just referenced in the video that I recorded earlier today. And then we have non-GAAP net income, the one Wall Street cares about, 4.1 billion, crossing 4 billion for the first time ever on that non-GAAP earnings line. This is the one that you'll see at the bottom of the income statement, Tesla reports, because on your income statement you have to follow the GAAP rules. But the non-GAAP number is what Wall Street cares about because stock-based compensation is a non-cash expense. And they throw that out because the company doesn't have to fork out cash to pay for stock options or stock compensation to employees. And that's how you get to your earnings per share numbers here. $7, $19. Both of those are record highs, up year over year. So Tesla's still delivering on earnings growth at the bottom, despite automotive gross margin not looking so hot. Up at the top of the page, a lot of good stuff happened elsewhere in the energy and other services and other divisions, and with the operating expenses staying in line. Leading to net cash provided by operating activities. Now this number is lower, and part of the reason for that is the lower ending inventory, or I'm sorry, the higher ending inventory being unfavorable. That's what I meant to say. So the more of your production you need to hold as ending inventory at cost on your balance sheet at the end of the quarter, the harder it is to generate a really good net cash provided by operating activities number. If Tesla had sold those vehicles, they would have been able to declare the revenue for that and take profit. That's the difference between the inventory at cost and the revenue received for selling those cars. But because the finished goods inventory was still on Tesla's balance sheet at the end of the quarter, that doesn't contribute to cash provided by operating activities. So that's why this number was a little lower than we've seen it in previous quarters. But capital expenditures remaining steady at around 1.7, 1.8 billion every quarter for the past 5 quarters. Very steady. Only up 3% year over year, or an increase, a greater negative number than it was in the prior year, with free cash flow being the result of the operating cash flows being lower, not a result of the capital expenditures being higher. That's how you get this number. You just take the operating cash flows less the capital spending, and that's how you get free cash flow. So still positive. Not as big a number as it's been in some previous quarters. But the cash balance for Tesla still up over $20 billion for the second quarter in a row, past $22 billion worth of cash, cash equivalents, and investments now. Good stuff. And that's where I'll end the video for today. If you've enjoyed today's video, click the like button. If you're not subscribed to my channel already, why not go ahead and subscribe to my channel and click the notification bell to get alerted when I post fresh content. And thank you to anyone who supports me, either by supporting me on Patreon, which you can find links in the video description to, or by joining my YouTube channel, as my executive producers Kathy Kitchler and Halter Ferguson Financial did. And I'll see you in the next one.